Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Hello everyone, my name's Manpreet and welcome to Cut to the Chase. Now, we don't usually worry too much about seasons in tropical climates like Singapore, but in the UK, this weekend marked the start of British summertime, when the clocks move forward by an hour and stay there right through till the end of October. Now, what would you do with the extra hour of daylight in the morning? One way, of course, is to get a head start on markets. Now, this week, we have a busy week ahead from a data and events point of view, but we'll be specifically keeping a close eye on three things. The first is market technicals. Now, while the S&P has rebounded nicely from technical support around 4,200, it now appears to be running up against technical resistance around 4,600 that could contain equity markets, at least in the short term. Now, this hindrance notwithstanding, though, there are also two pieces of good news. The first is that over 50% of S&P 500 stocks are now above the 50-day moving average, which is one sign of positive momentum. The second is that April tends to be a good month for equities from a purely seasonality point of view, with one report I came across arguing April has delivered positive equity returns 74% of the time since 1990. Now, the second thing we'll be watching closely, of course, is economic data, with this week being particularly important in the US. Now, Friday sees the release of the key US employment report. Consensus is looking for a further fall in the unemployment rate to 3.7% with the addition of 460,000 jobs. The other piece of important data due on Friday as well, of course, is the ISM Manufacturing Sentiment Index. We also have a number of jobs and inflation data releases due in the US through the week. Now, outside the US, we're also set to see the Eurozone Business Climate Index, which is likely to be a key focus after last week's sharp drop in Germany's IFO business sentiment data. Now, China is also set to release its PMI manufacturing and services sentiment data. Japan releases its Tankan business sentiment survey. India releases external trade data, and several emerging market central banks, including those in Kenya, Chile, and Thailand, will meet to set policy rates. And finally, the third one is we'll continue to keep a close eye on policy speeches. Now, the series of US Fed policymaker speeches continues into this week with at least one key speech every day from Tuesday to Friday. The key focus, of course, being the number of rate hikes likely this year and whether one of them will end up being a 50 basis point rate hike. The 10-year US government bond yield rose all the way to 2.5% last week, and this was after New York Fed President Williams said on Friday that a 50 basis point rate hike could be warranted if it helped combat inflation. Now, if I look at market pricing, I can see that markets are now pricing in 8 25 basis point rate hikes this year, which, given the number of meetings, implies that at least one of the rate hikes would have to be a 50 basis point rate hike. Now, this relentless rise in US bond yields has meant that it has been a tough ride for investment-grade bond investors, with one table I came across illustrating how total returns for a key investment-grade benchmark have thus far been the most negative, peak to trough, since at least 1996. So clearly a very busy week ahead in terms of data and events, but one where we also need to keep a close eye on market technicals. Before I leave you though, I want to point out that we just released our Q2 Outlook, and alongside that, we'll also be releasing a series of podcasts where we do a little bit of a deep dive into each major asset class. Steve and I put out a podcast on Friday where we focus on the broader strategy view, but this week we'll also do a number of additional podcasts on the macro and asset class outlooks. So please do keep a watch out for those. If you enjoyed this podcast, please don't forget to rate and like it. Thanks again for listening. We wish you a happy trading day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.